Investment in recent years has been comparable to that of the United States, and the influx of various hot money has been countless, resulting in a large-scale surplus in China's International Balance of Payments capital account. Meanwhile, after joining the WTO, China's foreign trade has grown rapidly, and its trade surplus in recent years has also been very large. From this perspective, a large amount of international capital has entered China, leading to imported inflation. On the other hand, the prices of international raw materials including crude oil, iron ore, etc. have skyrocketed, while China's large import of raw materials has directly introduced inflation from the import of raw materials. From the above, it can be seen that excessive currency has led to abnormal changes in asset prices and capital markets. But the current choice timing of the outbreak is related to many factors. Mortgage loan refers to a loan that can be based on property appreciation. In the event of property appreciation, increase the amount of mortgage loans or further arrange new loans for the appreciation part. The main forms are additional mortgage remortgage and home equity loan. In practice, due to the existence of leverage in such loans, they are an important channel for transmitting information and amplifying policy effects between the financial system and the real estate market. Managing such loans can effectively prevent resonance between the real estate and financial markets. Although such loans are not prohibited by law and regulation in Germany, the financial system maintains a very cautious attitude when engaging in such loan business. In addition, any institution that wishes to issue Pfandbrief mortgaged bonds must have sufficient collateral, and the collateral used for the issuance of Pfandbrief mortgaged bonds must not exceed 60% of the MLV of the property. This proportion is much lower than Spain, 80%, in Portugal, 75% in Ireland, and other countries. This arrangement has actually played a role in suppressing the issuance of loans with high loan-to-value ratios. At the same time, Germany's loan-to-value ratio is usually 70%, which is also lower than countries such as the United States, Japan, the United Kingdom, and France. In addition, the German housing loan market uses a housing evaluation price lower than the MLV of the real-time market value when calculating the loan-to-value ratio. This means that the actual loan-to-value ratio in Germany is even lower compared to other countries where the market value of real estate is widely used to calculate the loan-to-value ratio. Obviously, in the field of housing finance, Germany adopts the principle of prudence in the financial industry. In short, it is precisely because of the heavily fortified speculative factors that naturally exist in the real estate market that have been reduced to, as a result, Germany has become the only developed country among all developed countries that has not been affected by the real estate market interference, thus greatly eliminating the inevitable unfair factors in the real estate market. The structure of the real estate finance market in Germany is also worth paying attention to when it comes to real estate finance. Section by 2019 savings banks accounted for 32.1% of housing funds in Germany. Commercial banks accounted for 24.7%. Credit unions accounted for 23.8%. And building societies accounted for 10%. This structure has greatly weakened the commercial color of real estate finance and has played a positive role in curbing the foam in the German real estate market and the real estate financial market. In short, in the real estate system we adhere to the principle of renting housing, and in the real estate financial market, we adhere to the principle of prudence while minimizing the positive feedback effect between the re. What is the financial explosion? In terms of status, China's economic reform has accumulated a huge amount of currency in recent years. The huge industrial capital has accumulated enough energy for the financial explosion. At the same time as the accumulation of domestic capital, the amount of foreign capital flowing into China in various forms is also extremely astonishing. Driven by the essence of profit-seeking, foreign capital continuously operates capital in China, evaporating others and enriching itself. The expectation of international capital, the completeness of technological means, and the superposition of concepts such as China's financial openness to the outside world have matured the conditions for China's explosive transformation from gradual to sudden changes in the financial field. Empirical analysis shows that China's billions of state-owned assets, various types of assets, private savings, and foreign exchange reserves have far exceeded the equivalent of the real economy in terms of scale. The conditions for independent operation have been met. Secondly, how does the financial explosion manifest? From international experience, there are good expressions for the financial explosion. Bad news. In the 1990s, the result of the British financial explosion was the explosion of the City of London, in a city that was not deleverages. German companies are concerned about themselves. The preference for financing is not a passive choice under insufficient credit availability, but rather an active one based on strong profitability and abundant financial supply. At the same time, we can also observe a downward trend in the asset-liability ratio of German companies' deleveraging behavior. According to data from the Bundesbank, the asset-liability ratio of non-financial enterprises in Germany at the end of the year was % compared to the end of the year. It has decreased by percentage points. Necessary ineffective labor. Financial literature. One of the biggest characteristics of Ming is irrational prosperity, which includes a large number of investment failures and currency evaporation. It is these essential ineffective labor that achieve irrational prosperity. Acceleration of factor integration, that is, under the combined effect of globalization and informatization, the process of financial transactions are compressed. Efficiency is greatly improved, and the speed of factor integration is unprecedented, resulting in unimaginable scale and effects. cognitive differences have become an important variable affecting financial activities. That is, different cognitive levels and abilities determine the status and destiny of countries, enterprises, and individuals in financial civilization. If they are misled by conspiracy theory and take this as an action model, their future can be imagined. The foundation of this axiology comes from the formula of economic globalization plus market economy system equal money surplus. That is, the exchange-oriented market economy itself is a system of producing surplus money, and globalization has enhanced the ability to produce surplus money. The surplus money provides a prerequisite for the independence of currency transactions from the real economy, creating a currency as the trading object, and carrying out capitalization, securitization, marketization, and internationalization, upgrading, and ultimately, it will free from the constraints of traditional media, happily generate money, and create a new economic model of economic prosperity and prosperity. However, this perfect process has been embedded with the original sin of marketization from the beginning. Just like the original sin of agricultural civilization is the original sin of land concentration and industrial civilization is resource monopoly, the original sin of information civilization is information overflow, and the original sin of financial civilization is currency surplus and evaporation. Although Greenspan and Bernanke believed that there was a problem in the market, the media believed that it was the result of excessive morality, financial innovation, and unfavorable government regulation. Soros believed that it was the result of market fundamentalism, and Europeans believed that there was a problem with capitalism and liberalism. They almost invariably ignored the fact that the original sin of the market overproduction and the fact that the surplus currency lost its anchor of stability. Moreover, there is a lack of insight into the commodification attributes of currency. Currency has long surpassed traditional attributes such as exchange, circulation, and storage, and has become the world's most important trading product. The amount of capital trade is hundreds of times as that of real economy trade. As a commodity, it must follow general laws, and it is difficult to escape the cycle of economic crisis. The fate of the mystery of great stability. The German financial system has always been known for its stability. After World War II, Germany did not resemble the United States or Japan, similar to countries such as the UK. There has been a large-scale financial crisis. Although some studies by and Valencia also view the impact on the German financial system from II as a financial crisis, its scale or cost of rescue is much lower than the financial crises of developed countries such as the United States, the United Kingdom, and Japan. As shown in the table, we refer to Germany's long-term state of maintaining financial stability as the Great Stability. Monetary stability, housing financial market stability, and low systematic risk of banks are both components and reasons of great stability. To some extent we can even agree with such a formula. Man financial stability equal monetary stability plus housing financial market stability plus low systematic risk of banks. Source Systemic Banking Crises revised by Leclerc and Fabian Valencia. The Bank of Germany's commitment to maintaining the stability of the value of the Deutsche Mark has attracted worldwide attention. The sustained low inflation is shown in the table. This has won widespread praise for the Bundesbank, both domestically and internationally, as not all Germans believe in God, but they all trust the Bundesbank. After World War II, Germany's average inflation rate was the lowest among the group of 7 countries. Weidmann. After its establishment, the European Central Bank inherited the tradition of maintaining price stability from the German Central Bank, which believed that price stability is the greatest contribution that monetary policy can make to economic growth and job creation, continuing to ensure Germany's long-term low inflation. The German Harmonized Consumer Price Index exceeded % in the months from month to month. The proportion of months with or below 0 is only %. After the year the European Central Bank implemented unconventional monetary policies such as quantitative easing and negative interest rates in response to the international financial crisis, European debt crisis, and deflation risks. At present, it seems that these unconventional monetary a culture of long-term stability and stability in inflation has been formed and consolidated. After World War II, the German Central Bank went through a process from decomposition to reconstruction. After World War II, Reichsbank stopped its business. On the basis of the branches of the former Reichsbank, the occupying power established Landeszentralbanken, the central bank of each state in Germany. In order to promote currency reform, the Deutsche Bank was established on top of the state central bank to be responsible for currency issuance, policy coordination, and foreign exchange management. In accordance with the law of the Deutsche Bundesbank was merged with the State Central Bank and the Berlin Central Bank to establish the Deutsche Bundesbank to perform the functions of the German Central Bank. Both the Deutsche Bundesbank and its predecessor, the Deutsche Banks, have been committed to maintaining the stability of the Deutsche Mark's currency value and achieving low inflation. As shown in the table, they have won widespread praise. During this period, Germany's average inflation rate was the lowest among the group of 7 countries. Weidmann. The long-term stability of Germany's inflation rate has also allowed for the continuation or even strengthening of a culture of stability. A stable culture in Germany is not the norm, and without the protection of the central bank, it is also a fragile norm. If the painful experience suffered by Germans in the years of rampant inflation and suppressed inflation has sown the seeds of a culture of stability or anti-inflation, then the outstanding performance of the German Central Bank in maintaining price stability and promoting price stability has nurtured a culture of stability that not only runs through the era of great stability but also continues to this day. Authorities naturally become targets of criticism in various meetings discussing the economic situation. As a professional and responsible macroeconomic regulatory agency, the central bank has always adhered to its stance of strict prevention of financial risks, but urgently finds it difficult to find strong arguments to refute the fierce accusations from all parties. In this situation, the central bank entrusted US with the task to develop China's effective credit demand index, hoping to accurately identify enterprises that truly need credit support and can produce products that are needed by society rather than surplus through this index. In order to prevent loan misallocation to enterprises that do not meet loan conditions. The results of the project can be imagined that we have only conducted a statistical analysis of the number and amount of loans applied for and not obtained by some banks in the past few years, and concluded that the demand for effective credit sharply decreased during the economic downturn and the demand for effective credit gradually increased during the economic upward phase. In fact, this conclusion is at best better than nothing. Obviously, it is necessary to have a closer understanding of the effectiveness of financial services for the real economy and gain recognition from all parties. We still need to find a new way to depict the same. More and more researchers believe that analyzing financial functions may guide us out of difficulties. As is well known, Robert Merton has provided a relatively complete explanation of financial functions. In his view, the functions of finance involve multiple aspects, including facilitating savings and investment, payment and settlement, promoting social division of labor, preventing and resolving risks, improving resource allocation efficiency, coordinating decentralized decision-making processes, and reducing transaction costs. There are various financial functions, various financial instruments, and a wide variety of financial activities. The fundamental purpose of financial activities is to serve as a medium to allocate resources in the operation of the market economy. Therefore, the fundamental requirement of finance should serve the real economy is to effectively utilize its function of media resource allocation. The fundamental requirement of providing better financial services for the real economy is to reduce circulation costs, improve financial intermediary efficiency and distribution efficiency, and help enterprises create profits. We see that A Mystery of Finance, a comparative study of the German financial system, follows this path. The analysis is based on the train of thought. In the book, the level of added value of the financial industry is a measure of financial intermediary costs, which constitutes an important indicator for evaluating whether finance serves the real economy. The financial scale and its relative scale to the real economy reflect the paucity